Welcome everyone to the Kendall Report. It is Sunday night, and I can tell you right now, you folks aren't going to be very happy with me. This week is going to be drastically disrupted from my normal schedule that I do. There will not be an everyday schedule. And in fact, I think the next time that I will be live will probably be Thursday night before unemployment comes out. And then it gets worse. I'm not going to be around much for the next 2 weeks after that. So I'll be traveling, be very difficult for me to keep things up. So I will communicate to you folks the best I can. I do plan on posting some videos. There just won't be the live stream. So be prepared, okay, just so you know. probably never a better reason than to have these indicators than to have them on your desktop now. So make sure you don't go without those. So let's talk about a couple things here. And I will be in the live room tomorrow. So those of you that are in the live room, go ahead, 1 o'clock p.m. Eastern time in the live room. You folks that know how to get there and are signed up for that, then do that. I will be there for that. There's a fair amount going on this week again. There's a lot of earnings coming out. There's probably close to about 1,400 earnings reports coming out. There's a ton of stuff, but not the kind of material reports that we've had out, like with all the big techs and everything we had last week, not to mention with the Fed. So let's start with just kind of talking about what happened last week, right? And maybe let's review last month, because if you recall, and I'm going to spend some extra time with you tonight, so just know that. But if you recall, I said that we were going to have a third quarter rally. Most of the folks here said it wasn't going to happen. It looks like I want to go short bonds based on some of the comments here. The bonds look like they're topping out. But the bottom line is this. We had a crazy month. We had S&P up 9.1, Nasdaq up 12.4, and Russel up 10.4. That was crazy. Last week alone, S&P up 4.3, Nas 4.7, 4.3 on the Russell. So this was a crazy week looking back, in spite of the Fed raising rates and all the things that's going on. And I know everybody's talking about the decline in bonds. If you were going to buy bonds, just for the record, not going to cover interest rates, that was about 5 weeks ago, okay? Not now, okay? But we'll go through a fair amount of details. Let's just talk about the economic stuff that's coming out, and I'll get into a little bit of a riff, because unemployment numbers come out on Friday, right? And I think this is going to be a centerpiece, but let's go through everything that's coming out this coming week. So Monday, ISM manufacturing, I think that's going to miss. It's to come in at 51.8. We've got consumer spending. That's expected to be 0, right? So I think that'll probably be negative. We look at JOLTS. This JOLTS number, this job opening number, is the biggest bogus number that is released ever. Every time this comes out, this is a joke. Last time it was 11.25. This is the piece. This is one of the primary pieces that these folks in the administration are using on this. Labor is strong. There's no recession. I'll go more into that in a minute. But this is one of the pieces. This indicator is basically a survey. I mean, it's just not even a real number, okay? So that's going to get blown off, I think. Most people know that. I've got a notes here that this is the most bogus number ever. On Wednesday, we do have non-MFG index coming out, otherwise manufacturing coming out. We also have the services PMI, IHS services. That's not a major report. They're not one of the higher rated agencies out there. Thursday, claims 263. I'm expecting claims to continue to climb, and the continuing claims are at 1.359. I'm looking for both of those numbers to be up. And I'm going to do my best to communicate some stuff on Twitter and stuff while this crazy week's going on. I just had a crazy weekend. The amount of work I have to get done this week is just pretty much insane, as it turns out. So, and I worked all weekend. So those of you had a good weekend, good for you. I've been working all weekend. Unemployment on Friday is expected to be at 3.6. Payrolls are supposed to be up at 275. I'm thinking these numbers are going to miss, okay? I think that's going to be a big thing as we come into that. I'll talk about this more here in a minute. Let me get through all this stuff, and I'll go through a little riff on what I think all of this stuff is going to mean. Earnings, like I said, we've got about 1,200. There's really Monday's energy focus, Tuesday financial energy, broad spectrum on Wednesday, just about everything in the kitchen sink. And then on Thursday, we have oil, and we also have BABA. And the big thing about BABA is it's looking like we're maybe could get delisted, right? That's a thing. That could happen here. And then on Friday, we've got mostly financial, Berkshire, and a bunch of other stuff that's coming out on Friday. But listen, let's just go into a little bit here and talking about this employment situation. You know, I posted something on my Twitter account. I'm / portfolio expert, and there's no E in the expert. You can get to me there on Twitter if you're not following me. But I put out something the other day that they've changed literally from July 11th to the 28th of July, they changed the definition of recession on Wikipedia. So this is just a mass effort which to deceive the public on what's really going on. And the other side of this is actually this employment situation. Well, we can't be in a recession because unemployment's at 3.6. And I get what they're talking about, but everything is going to start to come apart very quickly. And I'm going to tell you, in spite of that, I still have a positive outlook for the markets right now. And I'll go into that as we go through the analysis tonight. But just expect everything to continue to back up. The claims, anything to do with employment is going to be moving forward. Now, I've been talking, I guess I can go back to fourth quarter of last year, and I was talking about the markets hitting, not the markets, but the economy hitting the wall. So just remember, the economy and the market are not the same thing. So be careful with placing bets based on what you think is going to happen in the economy and the markets. Might not work out so well for you. So just be very cautious with that kind of mentality. But overall, what I'm expecting to see here is just a complete disaster decline in a lot of the metrics that we're used to watching. And I'll talk about this. You know, we saw the back end of the yield curve. I went through a couple times last week. I would still reference you back to those live streams I did, I believe, on Tuesday and Wednesday. Probably the Wednesday live during the day that I did would be a really good one to watch, especially in talking about interest rates. But this I mentioned on, I'm just looking here to see what day it is coming out. On tomorrow, Monday, construction spending, not only construction spending is off, but commercial lending is non-existent right now. And so this is a reason why we're seeing the back end of the curve. There's just not a lot of demand coming into the things. Everybody is kind of on hold at the moment. And I think it's going to, like I said, it's going to get more like that. I will cover the Dow, and I saw some comments on the yen. The yen is just rallying vertical. And I think that's an interesting situation as well. I think if anything helps the markets out is going to be the softening Dow. And I talked about that last week. And I'll go into more details because I am going to cover the Dow, and I'll bring up the yen as well in that context. But just know that all the metrics are going to look as terrible as they can over the next several weeks. And I will do my best, like I said, to at least post a couple of videos. They're most likely going to be short, but I will try to get some updates out while I'm on the road, and I'll do my best on that. So just know that everything is going to deteriorate, but somehow it won't equate into a negative market at this time. Even China came out with the PMI, and it's at 50.5. So it's still expanding. This just came out in the last hour, and we're seeing Hong Kong and a bunch of markets under pressure in Asia right now. But everything's going to soften. Everything across the board. So just know that's the thing. And like I said, just remember, I said it earlier, the market is not the economy. And what we're seeing in cash flows and things of that sort that we're going to see coming into the markets are going to be, I think, very contrary to some of the fundamentals that you're going to be looking at. I think a lot of folks already have made a lot of mistakes in the last couple of weeks in doing the opposite of what I just said. They're thinking the economy is the market. And so I think I sunk my putt. Let's get into the database. Let's get into the rest of the show. And I'll probably go on several riffs once I get into some of these other areas on the technicals. Okay, folks, I'm going to back this up for a second. This was something that I talked to you a lot about as we came into Friday. I said we're going to get a big tranche of buying. We actually got 5,125 buy signals, or 35 buy signals, and 150 sells on the intermediate. And this is a big thing. I'm going to spend a couple minutes talking about this. This is a big thing that has occurred here. Now we're at 28.38%. I told you we probably bounced to 22 to 28%. But the reason why this is significant is that we have not seen any buying going all the way back to December of last year of 21. This is the first tranche of buying all year. It's come after multiple weeks of setting up a low. And a lot of folks seem to think, and I need to make sure you folks understand this that watch this channel, those of you that aren't using Wavetech and the like, is you need to understand that there's something else that's not the market. You look at the S&P and the indexes that we talk about all the time, and you equate that to what's going on with all stocks, and that's not what's going on. And this is what we're seeing here on the indexes are heavily top-weighted. And when you start to get in broader markets, you start looking at 16,000 symbols like I do, and you see literally 5,000 symbols come into play. That's a big deal, and that moves the meter up to 28%. You folks know that have been around here for a while, 42% is a big number. But this 28% is a big number, is these symbols, not all these trades are going to work out, okay? But the bulk of them, probably close to 60% of these symbols that issued buy signals are going to end up having some profitability going down the road. And that typical holding period is around 200 days. And in fact, if I go to the all stats page here, I know this will be really tiny. I just want to reference it here. The average holding on our optimized weekly, 204 trading days. That's a better part of a year. And that does, like I said, the fact that we get these 5,000 symbols, that's one thing. But we're going to see, I think, multiple weeks of this type of rotation going on. Not this big, but a net positive rotation. So those of you that have Wavetech, you'll see these bullish ratios over the next several weeks where there'll be a ratio greater than the amount of sells coming out. Like I said, we had 5,135 versus only 150 sells. So a huge ratio. In fact, the ratio here is 30 on the 1.2 model is 39 to 1. So this is a big, big ratio. And I'm going to spend just another minute on this because this tells us that there's intermediate trends starting to emerge. I've been talking about this event happening for 6-8 weeks. When it happens, I'm going to talk about it. That's what I'm doing tonight. This is a very significant situation. From my viewpoint, the world I live in is the world of 16,000 symbols, not the world of 4 or 5 indexes. And most people live their life around the indexes, and there's great trading and all that to be done. That's fine. But when you start looking at the internals of the market, what these signals are signals that trends are going to unfold. So multiple week, month, and maybe even a year, some of these symbols will be long even more than that. Those of you who've been around the channel, you could flash back to 2 points. July of 2020, I told you we got we had a day like this back in July of 2020. And that day was the beginning of the next phase of the recovery of the markets. And then we had another point in time in November of 2020. And a lot of those were energy stocks, financial stocks. Those you've been around the channel, I said, those are 2 places that you have to be focused on. And right now, on the sector standpoint, from this, we have 3 new buy signals on the sectors, and basic materials, which is interesting because that means maybe the economy's not failing as bad as we think, but basic materials, conglomerates, and services is in play. These are brand new buys on an index level on Monday. So you could go to any of these symbols that I'm talking about here, and you could break down and you could look at the subgroups, you can look at the individual stocks. Those of you that have Wavetech, just click the hierarchy and go from sector to groups and so forth. And in fact, if I go over here and just click on this for a second, you'll see the buy signals. Let's click on basic, and you'll see that we've already long fabricated plastic, forestry, and miscellaneous products. So you can see what subgroups that we're already long, and you can subdivide these. I know this is way too small to read on the screen, but you can click on that and you can see what individual stocks are being in play in those specific sectors. And that is very substantial to be able to go down and look at what's in play from that standpoint. So I think I've got my point across. This is a big event. This is a big event in my world, and this is something that I'm always going to spend a lot of time to talk with. We have institutional customers that watch this channel, and everybody needs to know it, but this is really a big deal. And we've been waiting for this. I have been waiting for this event all year. And here it is in July, and you have just about everybody telling you that the market's going down and all these other things are going on out there. I think probably last month turned some sentiment to more of a positive. But this is what drives this channel. This is what drives our software, our investments, and all of the institutional portfolios and everything that we have. Now, we're still heavy in cash, but we're rotating out on an intermediate level. On a short-term basis, let's go over and take a look at that real quick. On a short-term basis, we're now 79.86. So 8 out of 10 symbols are long on a short-term basis, 12,868. We didn't see a lot of new buying, but we're printing up at the extreme of what's going on from our database on a short-term basis. So that is going to be that's going to be kind of peaked out here. And what I'm expecting to see, since we had such a big month in July, we're probably going to see some backfilling here, some consolidation before we start to move much higher in this pattern. I still think that you'll see in the technicals, we'll talk about some of the targets and things like that, but there is definitely a fair amount that's going to rotate here in the short-term database. All right, let's get into the indexes here. Start off with the S&P. It's kind of stabilized. It came in, actually printed, I think, up the first trade, and it traded down to about 16, 18 down. We've just been trading sideways here for the last several hours, pretty much since the market opened for the last 4 hours. But what we're seeing here is really the markets are in a very strong uptrend right now. PPM1 at a 0.72, PPM2 0.36, PPM3 is just turning up, but everything's on hitting on all cylinders. Now the key element to watch for is going to be the 10-period moving average. It's down at 40.10 right now. It is going up at the moment at about 30 handles per day, so about 25 we'll call it. So that's going to be, in the next 3 days, all of a sudden 40, 65, 40, 80 is going to be a substantial amount of support down at that level. So even if we pull back a little bit, and I think that's a strong possibility here, that we're going to just stall and go sideways. One of the patterns that I talk about a lot in this, looking at the market grid, is we get into what I call a box formation. And that box formation, if we just look at today, we look at S1, 41.11. We've been down to 41.13, so we've already printed S1. R1, 56, 41.56. The high's been 38. So look for at least S1, R1. And I think we could expand a little bit on the downside down to an S2. But the range is more likely to be like S2, R1, and that's going to be across the board on all these indexes. I'm going to bring up the weekly to make sure you have good context, since my presence is going to be somewhat muted this week. All right, let's take a look at the weekly. And I hadn't even looked at this, but I just noticed that the weekly models got a buy for the first time. The last time we had a buy was going back to November 20th of 2020. We sold out up here at 43.82. We exited. This is the first buy that we've got. Here we are back at 41.37. The daily models have been long from 38.80. So that's on. That's going to continue to move higher. But let's take a look at the market grid for the week. Those of you that have the indicators, you'll be able to track this very closely. Right now, S1 is 40.86. That maps pretty good with the S2 on the daily. But 40.86 is probably going to be the bottom end of the range. And look at R1 is 41.81, R2 42.34. That also would move us up toward the targets that I've been talking to you about of 43.20. Write these numbers down. 43.20 to 43.80 is the initial target for this rally. I think we get a few days sideways, and then I think we resume, whether it's on this report that's coming out Friday or what's going to drive it. I don't know, but the general trend is up right now. You see the PPM 1 has turned down. It's actually turned back negative, and PPM 2 is accelerating, but we're still negative on the weekly PPM. So what that suggests is that we could come into those numbers I just talked about. The absolute extreme on the downside for the week is 40.32, and 41.81 is going to be your pivot on the upside to watch. So watch those numbers as we go through the week. There could be easily some backfilling back to around 40.30. That's going to be pretty substantial going forward. We'll take a look at the Nasdaq. We'll start with the weekly here. Same kind of scenario. PPM1 turning down, but it's still positive. Unlike with the S&P, it's turned negative 0.10. It's not in a downtrend, but it's still turned negative. The PPMs on the weekly on the Nasdaq are much stronger. You can see the PPM 1 and 2. PPM 2 is actually accelerating. It's a negative 0.14, but there's very good support at this 10-period moving average, which right now is 12,001. We're 800 points from there. That's going to be major support. We're also looking at 12,874 is where PPM2 is laying, or the 21-period moving average. So look for that to be good support. We look at the S2 level like we did in the S&P, 15,562, S1, 15,778. So those are the key numbers to watch on the downside for as we go through this week. On the upside, 13,164, possibility of 13, we'll call it 400, but 380. Let's take a quick look at the dailies. So the daily is very similar. 12,871 is S1, so we basically printed that. Look for an S2, 12,760, and an R1, 13,071. We're not quite there yet. So look for these numbers, S1, R1 to be the pivots. We get through S1, look for S2. We get through R1, look for R2. I don't know that we're going to have a huge amount of volatility today. I think everything's going to start to come into focus as we go through this week, and volatility will probably peak as we come into, I would say, into Friday, but more importantly, as we come through, some of these numbers that are coming through on Wednesday and Thursday are probably going to be a peak, and then everybody will get set for the unemployment. Next, we'll take a look at the Russel, and we'll look at the RTY. RTY went long at 1800.80 back on 720. This is on a daily. It's still long. We're starting to see these things falter a little bit, so I think they're going to pull back into support, just like with the S&P. Look for a potential S1, S2 for today. So far, we've had a low of 1870. That's just below S1. S2 is likely it's only 1864. These numbers are a little tighter here. But the same thing here again. If we go over to the weekly, what we're looking for here is, it was interesting that the Russell led. We got a buy last week where we're getting buys on the S&P and the Nasdaq for this week. And these are weekly buys. So that's going to be that whole scenario that I'm talking about with the multiple month, almost a year signal. These things last for a while when they happen. So don't expect this trade to go away very, very quickly, especially with the PPMs and the configuration they're in. So like I said, we're seeing a little bit of a stall here from the index standpoint. Okay, next we'll take a look at the 10-year. The 10-year is doing way more than I thought it could do. The one thing that is happening here, though, is we had a cycle come in, and I thought it was going to be a cycle low, but we've traded through everything. We're trading at 264. We could come down a little bit further. The pivot on this is all the way down at 2. We'll call it 2.25, which seems basically ridiculous. So there could, I was showing some folks talking about the bonds. Listen, there's still probably some downside on yields, and maybe the bonds can move, but back over when the PPMs are crossing way over here near these highs, this is when we started to get all the crossovers right in this upward consolidation right here on 624. That's where you wanted to be doing something with bonds at the 3% level. That's where you wanted to be buying. There still may be some upside, but it's going to be somewhat limited. What we're seeing here on the PPMs, just looking at the weekly 10-year, it's trying to turn up a little bit here. We're still positive. PPM 2 is 1.59. That typically will act as almost like a magnet for the market to get back toward the we're going to call it the 280 level. So over the next several days, we could see some stabilization in the downside of the yields and start to see some backfilling in this market at this time. If we go over and take a look at the daily, you'll see that the daily projection, which is one I talked about, 2.59, we're almost there, 2.64. I haven't looked at the overnight numbers yet. I'm just taking a quick glance while we're going through the stream here. And 266, so it's a slight uptick right now going on in the overnight markets. And I would expect that, like I said, to see it stabilize down at this level, especially right around this 260 level, should be somewhat of the bottom at this time. So be careful with the bonds, okay? If you owned them for a while, then protect them. Take a quick look at the yield curve, just straight up steepening over the past, we're going to call it all of last week. And I know that makes Chairman Powell feel very happy about what's going on there. But I don't see this inversion thing that I talked about. I think we're a ways away from seeing the Fed funds getting at 3.5, maybe more. Over the next, I don't know, let's say next 2 quarters, we're going to see the short end continue to go up. The Fed, if you look at what's out there and the rhetoric that's going on out there, they're all talking about the same thing. The Fed, and all the talking heads around them, and the presidents and different folks around different Fed offices, they're all saying the same thing. We've got to stay on inflation. They're going to keep that dialogue for a while, whether it's September, whether they do a 50 or 75 basis point, I don't think that even matters at all. But they're going to stay on that. And I think ultimately the 10-year is going to stabilize somewhere here, and then we'll see some backfilling. We'll probably head back to 280. I wouldn't be at all surprised to see us print back at 292 at 3% at some phase over the next quarter or so. So I'm trying to give you enough guidance here while I'm off away from the channel for the next several weeks. So let's go ahead and go to the Dow next. Okay, so the Dow, I have the weekly Dow up, and we recently, as of last Monday, got a sell signal on the models on intermediate, and we're sitting here right on the 40-week moving average, and this is really the tipping point, 105.69. We get through that, we're going to see some pretty substantial selling coming into the Dow. We're still positive here at 0.07, but there's not enough to hold it here. If we do get through that, we don't have any fib targets or anything working right now, but this is most likely a beginning of a further decline. And I think, like I said, ultimately this is going to translate into probably positive equity prices as we go down the road. So I also promised you that looking at the Dow, we would talk about the yen as well. And I'll bring up the yen here. And the yen is, like I said, the Dow yen is just going straight down. And so the yen's going straight up. And we came short. I was looking at 141. We printed up to 139.39. And that was it. That was the game. It was over. Somehow the BOJ and the finance folks did not have to step in and do anything. The Dow turned around. In fact, I believe most of what came out of the Fed meeting last week was everybody, emerging markets, all of those folks wanted to see the Dow roll over because it was putting a lot of pressure on folks. Now, I'm just going to bring up, as I'm talking about the Dow, and we're talking about and the emerging markets, which were old buddy of mine that used to work at Credit Suisse used to call it submerging markets, but they have been submerging. And this is the first time we've seen some buy signals, some things happening here on the PPMs. And this is EEM. I know this is kind of off board, but it has to do with the Dow and what's going on with the Dow yen. And with all the currencies, they needed this drastically to turn around. If this Dow would have stayed strong like it was, it would have really started to derail things. You know, I talked about if we got over 137, we did, but it didn't stay there long. So that was a good thing. Next, we'll take a look at crude oil. This is kind of a broken record. We are seeing still some downside. We are starting to see gasoline prices recede a little bit. And one of the things that I've talked about on the channel off and on is that if you look at the crude oil and you look at the 10-year that we just covered a few minutes ago, they look very similar. The crude was declining like the bonds were the yields were going down on bonds. Now the crude is stabilized over the last several days, and I think that will continue. We actually have some fib targets that have emerged here, 106, 111 on the upside. And the broken record part is I've been talking about 95 to 105 for months, and I told you that was going to be the scenario. That's still the case. We're still locked into that range. Let's go over here and take a look at the intermediate just to get a feel for what's going on here. And this is that box formation. We actually got what I call a bubble bottom in the market grid, which is typically of a major bottom setting up, at least in this pattern. And we're looking at the PPMs on the weekly basis trying to turn up, but they're just going to stay stable. You're going to have a lot of resistance at 100 and then again at 103. Those are going to be your major points, and the extreme peaks will be somewhere around 92 on the downside and 105 on the upside will be about all you're going to see. But this market for the last month or so has been very stable down in this level. We saw 92 low. We did print 87 several weeks ago, but since then, printed 92.88, 93.01, and obviously we just started this week and it's at 97 low. But I think if we look at the market grid, 96.14 is S1, S2 93.37. So S2, R1 looks like the range for the week as we come in with crude oil. So next market we'll cover is gold. We're coming right into resistance on gold. We have PPM1 down minus 0.52. That number right now is 1807. We're printing right now at 1780, and there's going to be monster resistance right from where we are trading right now, 1795 up to R2 1809, and then at that also represents right at the 1807, which is a 10-week moving average. This is a weekly chart we're looking at. PPM1 is down 0.52. PPM2 is also down 0.59. So those resistance points above there, 1807, and the absolute ceiling is at 1871. That's $100 from here. Not going to happen right now. But it is impressive that over the last couple of weeks, when we printed down at the lows here at 1696, we got a 16 handle to print, and it just rebounded from there. Almost perfectly coincided with the drop in the euro just below $1. If you look at, we were talking about the Dow a minute ago, the euro printed just hardly under the buck, under parity, and it just straight up, it's 1028 now. I mean, it's just straight up. So, like I said, the effort by the Fed and the rest of the central banks that were all reporting and talking last week really was to get the dollar down, nothing more. They didn't care about rates or anything. They were telling us one thing. They were really working the dollar pretty heavy to get that to come in, and it's doing a pretty good job. It's still following through there as far as that goes. So just know that gold is probably going to stay stable as long as that dollar's coming back in. Maybe we print up toward this 1807. That might be the magic marker there, and we'll see how everything plays out. And so the 10-period moving average, 1807 there, that's going to be your major resistance. And we may be pulling back toward that. And it's just a matter over the next couple of weeks. If we get this PPM to cross the second derivative, there might be more in there. We could all of a sudden see 1870 plus. It was feeling like we were going to zero. And like I said before, the gold was defying gravity in real terms, because it probably should have been 16, low 16 handle, or even 15 when the dollar was screaming, but it didn't do that. So it continues to be a fair amount of support right around the 1700 handle. Okay, so the final market I'll cover tonight is Bitcoin. Bitcoin continues to climb. This is a weekly. 23,434 is a 10-week moving average. PPM is turning up, still negative, so there's still some downward pressure here. 23,434, last 23,417, so we're trading right at the 10. We did print up to 24,408, and like I said, if we can get above this chart's going to update in a couple hours. If you have the indicators, you're going to be able to see exactly what's going on there, and you should be able to see the update and see if these PPMs turn up. If PPM 1 turns up through the second derivative, that's going to tell you that we can sustain prices above the 23.4, and ultimately it says we're going to test the 21-week moving average, which is 31.4, dropping about 500-600 per week. So somewhere between, and I've talked about this number before, 28 to 31 would be the target if we can get PPM 1 to cross its second derivative. But PPM 2 is ready to roll too. So we're right at the phase where within the next week or so that it looks like the Bitcoin's going to be able to move much higher in this pattern. 28.31 that's a big move compared to what we've been going through for a while. So we'll look at the daily chart real quick. We're still seeing PPM's very mixed. PPM1 is 0. PPM2 is a plus 0.65 and PPM3 0.24. So we do have trend mode going up, which that tells us that major support between 21,849, 21,159 is major support. And there is support even at the 22,676 level. So about $800 under this level. To me, we're just seeing a turnabout on everything. Even the Wavetech 200, which is tracking the 200-day moving average, has turned up. If you look back at this, it's done quite well. Also, the models, the Wavetech model bought Bitcoin on 7/8 at 22,119. So it's still holding that trade that was put on a while ago. So continue to see, expect to see this market move a bit higher as we go forward. Okay, folks, that's going to do it for tonight, but it's also going to do it until Thursday night. Not possible that I'm going to have the time or the energy with workload I have. And then once again, just tell you, the channel will be massively challenged for the 2 weeks following this week. So, yeah, so just know, and like I said, I will be communicating. Follow me on Twitter. I'll do my best to keep some dialogue going there. And maybe if I have some time, I'll do a Twitter Spaces or something just to update. Those are pretty simple to do. And I'll just see what happens, folks. And just hit that notification bell. So if I do happen to come live, I've got some extra time and I want to update things, I'll do it probably ad hoc, just whenever I have a moment to do it. Otherwise, you'll be seeing me on Thursday night at the usual time at roughly, it used to be 9 o'clock. Now it's 9:30. Tonight it was 10:15 Eastern time. Just a lot going on here. So I appreciate everybody, your patience and your continuing support. Remember to subscribe, hit the bell, please. Yes, Chris, I will see you tomorrow at 1 p.m. in the live room. Okay, folks, have a great evening. KJ, don't be lost. Get the indicators. Hit that like before you go, folks.